Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, and this is a one-year daily candle chart of the CBOE Volatility Index, ticker symbol VIX. I'm starting off with this one because if you had a chance to join us on Wednesday during the midweek market report, I did talk about this, and I showed the weekly chart on the VIX going back some years. And as I zoom in here, you can see that we now have 10 red candles in a row. That has not happened in many years. Now, in addition to that, you can see down below that the red line and the blue line, which is the percent D in red versus the percent K in blue, that divergence between those two lines is the widest it's been in almost 5 years. And it's starting to move up. Down below, we have what's known as the Commodity Channel Index. That's a CCI. And so we are long overdue for a green. Remember that the VIX, for the most part, is inversely related to the S&P. So next week, I do believe, is going to be the week where we see that candle turn green. So keep your eyes on the VIX. If you're an option trader, you're absolutely loving this, because you get to trade cheaper options on the longer term calendar. So those are known as leaps. And we as option traders have been buying leaps while the VIX is down. And we've been selling other options against those long positions to help pay down the cost basis. And that's what we do each and every week with our members. Now, again, this is the daily chart for the VIX. You can see that we're in a very key support level area right here. And down below, the CCI is showing a positive divergence. If you look down at the price and how the price of the VIX has been dropping, we can see that the CCI itself has been going up. We're seeing the lows here are getting higher as the prices are getting lower. And that is extremely positive for the VIX and negative for the markets. Now, let's go to the diamonds, ticker symbol DIA. This is a weekly chart going back, and you can see that we are still stuck in this massive trading range right here. You see these green dotted lines are the resistance levels that I have up top right here, and this is going to be a key role reversal support level right there. So we are definitely at the top. Again, at the midweek mark on the midweek market report, I did mention that we would go up to test that resistance and fill the gap, which we have off to the left. That gap is now filled. And I also mentioned that we could expect to see a drop in volume as the resistance levels were being tested. And that's, again, exactly what happened. So I'm not moving anything. I'm keeping that downside target the way it is. Again, our option traders are focused on the lower levels with their option spreads. And so not much has changed there. You might want to check back with me on Wednesday during the midweek market report. If you're interested in tuning into that, just go to the marketrebellion.com website, just marketrebellion.com, and right dead center, right on the homepage, you'll see a link to get to the midweek report and keep you abreast of what's going on while we still have a couple of more days left in the week to trade. So I've even had some old friends call me, Bill in particular. Bill Scharf, I'm going to do a shout out to him. He's a movie partner of mine way back when we were producing movies together. He's a stunt man, by the way. You've probably seen him many times in different action films. But I'm doing a shout out because I spoke with him, and he said that he's following along with the weekly market reports and trading the futures based on what I'm saying, and he's doing very well with that. So hopefully I'll get to connect with Bill one time real soon. So Bill, shout out to you. Thank you very much. All right, so that is the diamonds, not changing the downside target. If we look at SPY, we have, again, a downward trend here that is not quitting. A lot of people ask me, are we going back into a bull market? Are we still in a bear market? What phase are we if we are in a bear market? We're still in a downward trend, folks. Don't kid yourself. These are lower highs right there, lower highs. We are right at that resistance high on the trend line, and we're also forming a pivot point at that resistance point as well. So still, everything is turning negative even after Fed Chairman Jerome Powell made his comments, whatever those were, dovish, hawkish. He doesn't even know what he is these days. But that's a pivot point. Today, even though we had a slight upturn in the markets, we have a lower high and a lower low. That is a full-fledged pivot point. We have the CCI moving lower. My downside target on that is still down there around 387.73. Actually, I could take it from that zip line. That's 387.45. So nothing has changed there. If we look at the IWM, right, that's the Russell 2000 ETF. Again, still in a downward sloping channel right here. We have from this high right here to that high, projecting out. There's your downward trend right there. And I could even take a line parallel and run that into a channel. There we go. We have a downward sloping channel. Negative divergence on the CCI down here. You see that? The CCI highs are getting much lower. And we have the pivot point. So again, as I zoom in here, we are not changing anything on that downside target. It's more or less stuck between resistance up top and support down below, which is a gap fill point right there. Now, finally, before I get into the geopolitical news, let's take a look at the tech sector. This is the Qs. I'm showing a 4-year daily chart so you can see that we are still on track for hitting my 2020 lows. The March 2020 lows are my targets that I have set for every market, and I do not see that changing. In fact, as many stocks, you look at Adobe, for instance, they've already hit that 2020 low. We have a lot of financial companies, and even the tech stocks are on their way. Go talk to Kathy Wood, and you can see that her fund is still down below those lows, and there's still a lot of selling pressure in the market. So be careful you don't get caught in what I call these bull traps. Right now, we still have this downward sloping channel right here in the market. You can see that this is a most recent high that is, again, right at a resistance point here. There's a gap above the market on the Qs. If I back out just a little bit and connect this high to this high right there, and I just project that out, we're still in a downward trend. And we have that downward pivot to forming today. Even though it's a green candle, we have a lower high and lower low as we compare that to yesterday's doji candle. So that downside target is still in place right there for the Qs at 275.90. Now, before I get into the geopolitical slides and news, I just want to show you something I find to be very fascinating. If you haven't had a chance to look at this, this is the usdebtclock.org. Just go there and grab yourself a drink and just be in a trance as you look at this thing, because I want to point out 4 different cells here that are clicking away like crazy. First and foremost, I want you to look at our U.S. gross domestic product. This is the GDP. You see that? Now, if you took out a stopwatch and just did a little calculation to see how many times we add $100,000 to our GDP, and then compare that to the U.S. debt down here. Just take a look at that. Just embrace this for a little bit. And you can see that the U.S. debt clock is moving 10 times faster than the GDP. And if you think that's something, I want to show you another thing. All the way to the left over here, you can see the U.S. total interest paid on our debt. Now remember that interest rates are going up. According to Fed Chairman Jerome Powell, interest rates are still going up. He still sees that inflation is a threat. This clock is ticking as fast or faster than we have any other cell on here. Look at the interest over here just clicking away. But now I'm going to bring your attention from the interest paid on the U.S. debt to the total federal, state, and local spending. What is that comparison telling us? It tells us that they are still spending more money than what we are paying in debt. So, in other words, they're not getting behind this at all. They're spending more money than the interest we pay on our debt. So there's no way out of this black hole. It's just not happening at all, folks. Now, if we look at what's happening around the world, I've been picking up on the BRICS nations and how it looks to me like they're going to try to squeeze the U.S. out of the position of having the petrodollar in charge right here. So we have Saudi Arabia. There's a real strong possibility that the Saudis and possibly all of OPEC will be joining the BRICS nations in a move to more or less dominate over the US dollar. I'm going to get to that in a little bit. But this is something to keep an eye on. The other thing that we want to pay very close attention to is the velocity of money. What is the velocity of money? Well, this is what it looks like on a chart. When you have a dollar, let's say you have $1 right here, and you go out for the weekend and you take that dollar and you give it to the bartender as a tip because you're having a great Friday night or a Saturday night with your friends. So you give that dollar to the bartender as a tip. The bartender, after checking out, takes that same dollar, gives it to the Uber driver right here, and then the Uber driver goes to the gas station and puts that dollar in the gas tank. What is that? That is the velocity of money. The rate at which the dollar is changing hands across the nation in our economy. This is from the Federal Reserve right here. It's the Federal Reserve, St. Louis, and this is a record low level of the velocity of money. That's it. That means our economy is coming to a screeching halt. Money is not moving. Why is that? Well, because there's inflation. And families got to put food on the table. So what they're doing when they get finished paying their bills, they're going to try to tuck that dollar away and save it for a rainy day in case they need it for an emergency. But the problem is it's going right to debt. They're not getting a chance to circulate that in the economy. It's going from their paycheck right into the Visa card or MasterCard or whatever it may be. And the money is not moving into the economy. And so this is something that you have to pay close attention to as well, because our economy is hurting real bad right now. And the Fed, while they're trying to be dovish on one side of their mouth to stimulate the economy, they're also saying that they're being hawkish to try to offset or even stifle the inflation. Well, the problem is they're not doing either of those things. And we're moving full speed ahead into a recession that is going to be coupled up with inflation, which is known as stagflation. Now, I want to point something out here. I keep talking about Davos and the global elites and such. Well, Klaus Schwab, if you don't know this already, he's the founder of the World Economic Forum. And these are his words, folks. This just came out last week. Klaus Schwab stating, history is truly at a turning point. Now, think about that for a second. Why is he saying that? History is truly at a turning point. Well, he's more or less talking about the Great Reset. They're trying to push the Great Reset. What is that? They're basically trying to enslave the entire world with a digital currency and get you dependent on the governments of your nation in more or less the handout situation. This is communism. This is progressiveness. This is what we see all the time when government tries to take control of our lives. And I'm not getting political here, even though I am politically incorrect. I'm telling you right now that this is something that is very dangerous for the entire world, because their plan is to disrupt the global energy systems, the food systems, and the supply chains. And he even said it in his own words, they will be deeply affected. Keep that in mind. I'm going to be continuing to report on the World Economic Forum and what their plan is for us and the world. And it will definitely have a deep impact on our economy as a whole. Remember, I talked about inflation. These are the categories that are being most affected. Just from Yahoo Finance just a couple of days ago, you can see that housing right here, the cost of housing and transportation is key. This is the growth or the change in additional spending that inflation has had in these areas. And if you think about food and energy are not being calculated into the core energy or the core inflation numbers. So they're trying to disguise what's really happening. Remember, everything is being painted all rosy, or at least they're trying to paint that rosy picture, but in fact, it is not. And that's why I continue to stay in this bearish stance. You know, when Fed Chairman Powell came out and made his comments, the market rallied. The Dow rallied over 700 points. And again, according to him, in his own words, inflation remains much too high. And that's what we've been talking about. Inflation is a tax. It's going to eat into the value of the dollar. It's going to eat into your buying power. And that, again, continues to slow the economy, which is why I do believe we're going to see a very deep recession in 2023. Now, let me just slow it down just a little bit for you here, because this is a comparison of where we are today as compared to where we were in 1929, right before the crash and right before the Great Depression. Now, you don't have to open up your history books to see what I'm talking about here. But in this chart in 1929, where are we in current time? We are right here. We could even see, folks, a little bit of a rally. I don't think we'll see that much in 2022 or 2023. I don't think we'll see that. But even if we see another rally, what are we going to expect after that? Well, this is what I am expecting right here. The major part two of the crash of 29. That's why when I mark my 2020 lows, my March 2020 lows, look right here. That's where I'm drawing my lows from, because that's a key support level. And I think that we are absolutely in striking distance to hit that. So again, if you're interested in learning how to make money on the way down, go to Market Rebellion. Take some of my courses. Learn how to trade options. I have trade alerts. I'll tell you how to trade them, how to get out of them, how to roll them, how to manage risk on them. And we have many members that are chiming in on the comments page, and I thank you all for that. But in order to make money on the way down, you have to learn from someone who knows how to make money on the way down. They're not going to teach that in college, that's for sure. This, to me, is absolutely obscene. I can't even find another word to describe this. The DC think tank, these are the politicians in DC, are actually discussing the possibility of giving Zelensky $1 trillion of his $3 trillion plan to rebuild and reconstruct his country while in the midst of a war that is escalating, by the way. This is absolutely outrageous. Everyone should be calling their representatives in D.C. and saying, put a stop to this. $1 trillion when our southern border is wide open. $1 trillion when we still don't have baby formula on the shelves for young mothers and babies. It's $1 trillion that we don't have and that could be going into our economy to stimulate our economy. It's not doing. So again, this is absolutely outrageous. This just came out on Wednesday. And this is all fresh news, by the way. I try to build fresh news on each one of these slides so you can see how that's going to affect us moving forward. Again, this is from Bloomberg. Continuing jobless claims hit 10-month high right here as layoffs explode in November. This is a chart that you have to pay very close attention to. That is going straight up. There's no pivot points going lower. You see, folks, this is momentum in the opposite way that we want it to go. So if you want to make money, you have to know how to make money on the way down. Again, I'm not going to beat that dead horse, but I want to tell you that we're doing very well, our option traders, in this bear market. And I continue to think that we're going to have the best year ever in 2023. Finally, before I wrap things up, Credit Suisse is slashing jobs, and look at their chart. Holy mackerel, their stock suffers the longest losing streak ever in their history. Now, this particular bank, I mean, they're known to be protecting their clients in more of a confidential sort of way, but they are hurting very badly right now, and this could be one of the catalysts that drives the rest of the banks. And keep note of that because, as I mentioned last week, silver, I want to bring my charts up here. Silver is moving up quite nicely. Now, if, again, you were on the weekly market report last week and you were on the midweek market report this week, I'm starting to talk more and more about silver because, again, this could be the catalyst that puts the nail in the coffin for the commercial banks that hate silver. You got Citigroup in there, Bank of America, JP Morgan, HSBC. You know, you've got these banks that are shorting silver, and once it starts getting over these highs, the short squeeze is on. Now, I just want to let you in on a little something right here. I sold out of a very small bit of my position. I only sold out of 15% of my silver because there is a gap below the market. And the reason I did that is right downstairs. Look at that. CCI is starting to hinge lower. So my goal is to buy all the rest of the silver back. I'll buy more shares than I've had ever before in my life. And then I get ready to take another run to the upside. And so that is it for this week. Folks, thank you so much for liking and subscribing and commenting. Please hit the notification bell and you'll be notified when these alerts go out right away on your phone, and you won't have to wait until next week to get it. You know, hitting the subscription button is great. Hitting the notification button is good. But the most important thing that I could ask of you is to share it. If you could take that link and share it on your social media pages, whether it be Instagram, Facebook, Twitter, you name it, go ahead. Please share that, because you're helping so many other people get on board with us in learning how to read the charts and make money up, down, or sideways. So again, I'm AJ Monte. Have a great weekend, and we will talk to you soon. So long.
As traders, we are beholden to forces greater than any one person. Forces that can lift spirits or leave scars. There are those who passively resign to their fate, leave their decisions to others, and let the chips fall where they may. And then there are the rebels, a battle-tested team of expert technical analysts, astute educators, tactical momentum traders, crypto connoisseurs, and the select few who take the market head-on so that they may have a say in their own destiny. Guided by the mantra, discipline dictates action. Discipline dictates action. Discipline dictates action. Today, we rebels gather, a community of mavericks, forging a path through the ups and downs on our own terms. Welcome to the rebellion.